Hey everybody, this is Jim Kurtz with Harvest Harmonics. I want to welcome you again to our Ask an Expert show. And today we have a very, very special episode. This is something that, as farmers, sometimes we get so wrapped up in crop yields and these types of things, we don't think about some of the other aspects of the business. And today we have a very special guest, William Long and Jonathan Tucker with KBKG. Financial. They're actually tax consultants, and they help people find tax credits and apply for various things that will improve your tax or reduce your tax liability. And today we're going to be talking about how some of your research and development activities could possibly help you qualify for some really good tax reductions. So, William, thank you. William and Jonathan, thank you so much for joining us today. I appreciate having you guys on, and happy to have you.
Thank you. We appreciate it.
Thank you.
Excited to be here.
Yeah, exactly. So as we were talking yesterday, we were talking about the R&D tax credit. So talk briefly about what the R&D tax credit really is and sort of how it might apply to farmers or agriculture.
Yeah, absolutely. So the R&D tax credit is an incentive that Congress put in place to encourage companies to invest in certain jobs in the United States. So it's really a jobs-based credit. And what I think would be helpful for us to do is kind of go over what is that definition of R&D, because most people think research and development as white lab coats, test tubes, and beakers. And it really is broader than that, because as I mentioned, the whole incentive was to encourage companies to invest in jobs here in the United States. So they purposely defined the credit broadly so that more people could qualify for this credit. And basically, if you do meet the definition of R&D, you are potentially eligible to claim a credit on those activities, which will reduce your income tax liability dollar for dollar for those particular types of activities. So the definition of R&D is going to be based on the activities that companies or organizations are performing. And so what you do is you evaluate all your activities and you determine if an activity meets the definition of R&D, which we have broken down into 4 parts, and it's called the 4-part test. And if an activity meets all 4 of those parts, then it's initially eligible for the R&D tax credit. We can talk a little later potentially about some exclusions. Obviously, anything in the tax rules, there's always exceptions to the rules. But generally speaking, if you meet the 4-part test, you could potentially be eligible for the R&D tax credit. And so the first test is the activity that you're doing must be reliant upon a hard science. It must be technological in nature. So these are your chemistries, biology, engineering, software development. Anything that is hard science in nature could potentially be eligible for the R&D credit. So anything that has to do with formulations, chemicals, the way you engineer an irrigation system, things like that, that all could be potentially a technical in nature. The second test is the activity must meet what we call a permitted purpose, meaning the activity must be intended to develop or improve a product, process, formula, technique, or invention. So these can be revolutionary or brand new products or processes that you've never done before. But more often where we see people qualify is in that evolutionary or incremental improvements that you make to existing products and processes. So anytime you're trying to make something better, faster, cheaper, stronger, more reliable, more yield, that all can meet what we call the permitted purpose test. And then the third and fourth tests go hand in hand with each other. And what the third test states is at the outset of activity, there must be some form of technical uncertainty. And this can be in the form of capability, methodology, or appropriate design. So capability, meaning you have no idea you can achieve whatever it is you're trying to do, clearly a technical uncertainty. But where we see most people qualify is in the methodology or appropriate design. Meaning given enough time and resources, you know you could achieve what you're trying to do. You just don't know the best way or the most optimal way to do it. So what you do is you undergo the fourth part of the test, which is a process of experimentation to eliminate that technical uncertainty. And that's just some iterative process that you go through to evaluate alternatives or test hypotheses. It could be technical discussions, whiteboarding discussions, prototyping, beta testing, trial and error. Anything that's iterative in nature where you're evaluating different ways of doing things can meet the process of experimentation test. So if you meet all 4 of those parts, or if an activity meets all 4 of those parts, then it's potentially eligible for the R&D tax credit. So improving, say, crop yields, things like that, that all could potentially meet the 4-part test of what you're trying to do to improve a crop yield.
Right. So, for example, if somebody was interested in utilizing or doing a trial or a side-by-side test, with our Kiminasi plant booster, and doing that trial to see how much of a yield increase or if it would increase the yield, that experiment, that trial, and all the labor and cost involved may be able to be part of an application for an R&D tax credit. Would that be correct?
That's exactly correct, which is a great point that you talk about the cost involved with it. So if you're doing that side-by-side comparison to do crop yields to see what's going to produce the better results, what are the costs that go into that activity? And that's really what's going to drive the R&D tax credit. So there's 3 types of costs that are defined in the tax code that are eligible to go into the R&D credit computation. And so the first cost is wages that you pay your employees and pay yourself. So to the extent you have employees involved in the activity, not only directly performing the activities, we can also qualify individuals that are directly supervising and directly supporting the qualified activity, right? So you may hire or have let's say a botanist or something like that coming out to do evaluations, right? Doing the actual activity, but you may be supervising it as their manager. We can pick up both those people. Or you have maybe someone that's actually planting the seeds or something like that they're just putting in the seeds, doing the watering, doing whatever. They're maintaining the fields that you're evaluating. We potentially pick up their wages too in a support activity. So there's 3 layers or 3 levels of individuals that could potentially qualify for the R&D credit. And as I mentioned earlier, it's going to be driven mainly off wages, which is jobs, right? So the more you pay people and the more people you hire, the potentially higher your credit will get. So that's the first cost. Second cost is supplies that you're using and consuming in the R&D process. And so these are tangible items that are not subject to depreciation. So these are more your consumables. So they could be chemicals, herbicides, pesticides, seeds, anything along those lines. What does not qualify is machinery and equipment, because those are considered assets. So, if you had to buy a sprayer, or if you had to buy a tractor or anything like that you're involved in it, that would be considered an asset and not eligible to credit. It's the consumable supplies that are eligible. And then the third and final cost is contract research. So these are third parties that you may have engaged to assist you with your qualified activity. So those could be 1099 individuals that you've engaged, or they could be third-party companies that you've engaged to maybe do some samples for you or testing or things like that. You could potentially pick up the cost that you paid them in your credit computation as well.
So that's great. So I'm looking at this and thinking, so if somebody's got a science team, they've got an agronomist, they've got maybe some lab costs associated with doing a trial, these types of things, that they're hiring employees maybe to work the fields to manipulate or to measure some of these things. All of these costs would be part of something that they could apply for in terms of an R&D tax credit. Would that be correct?
That is correct. Yeah, the part of their time or the part that they are spending on those qualified activities, you could potentially pick up into the R&D credit computation. And it's not an all or nothing deal, right? So, you mentioned you may have had an agronomist come and you hired them to do something. They may not spend all their time on R&D activity. They may only spend half. And so you could pick up half their wage in the R&D computation, because the other half is, let's just say, related to regular business. So it's not an all or nothing deal. It could be partial.
Okay, very cool. And so I think we kind of answered the next question. So how much do you think a farm could save with these tax credits? Like, for example, let's say a farm is doing, $500,000 to $1 million a year, perhaps, in revenue, but their R&D budget might be 10% of that. So their R&D budget might be, let's say, $20,000 or $30,000 of their overall revenue. How much of a tax credit could that theoretically save? And I know there's a lot of variables, but
Yeah, there are a lot of variables, and the formula for R&D is constantly evolving, so it's not the same answer year over year. It is an annual credit, though, so this is an annual incentive, so you could evaluate this every year based on what you did during that year. So the numbers change, and it's constantly looking back in time, comparing to what you did in the past to what you're doing now. But a good rule of thumb is, if you think about those costs I mentioned, wages, supplies, contract research, The dollars that you spend in those areas, I like to call it bucketizing. Fill up your bucket of those costs. And if you think about all the wages that you're paying your employees, all the supplies you potentially used, and they can be, maybe they don't have to be coded to R&D or anything like that. It could be just regular operations, but you are doing R&D activity. We could pick up a piece of those wages and supplies and put it in the R&D bucket for R&D computation. So fill up that bucket. And then for every dollar that you fill that bucket up, you'll get about 7 to 10 cents back in a federal R&D tax credit. So if your bucket were $500,000 of expenditures, you can estimate that you have around a $50,000 U.S. Federal R&D tax credit. So it's about 7 to 10 cents. And again, like I said, that could be higher, it could be lower, because it just depends on your facts and what's happened in the past. But that's a good average if you're trying to figure out what do you think the potential could be for you. So just take your dollars, multiply by 7 or 10%, and that would be what you'd expect for a U.S. federal credit. And again, that is to reduce your tax liability, not a deduction. So it's more valuable than a deduction. It reduces your actual tax liability dollar for dollar. There are also certain states that offer R&D tax credits as well. So about 37 states have R&D tax credits. So to the extent you're performing or employing those people in those particular states, you may be eligible for an R&D tax credit in that state as well. Every state has different rules and different ways of computing it, so it's harder to estimate. But generally speaking, you'll get between 2 to 7 cents back in a state R&D credit if you're in a potential state that's eligible. California has one of the better R&D credits out there. Texas and Georgia. Those are some of the states that have some bigger R&D incentives.
Yeah, for sure. And obviously, anything you can do to reduce your footprint in terms of your tax liability, and that's huge. I mean, if your revenue, that could be a tax bracket, right? So your revenue could actually end up being like, okay, your business is in one tax bracket, but with this, they may be able to reduce that liability substantially. So that's very awesome.
Yeah, exactly. So if you, let's just say your tax liability was $500,000 for the year and you had a $100,000 R&D tax credit, essentially you would owe $400,000, not $500,000. So you would save $100,000.
Nice. And so besides you mentioned payroll tax being a big part of that. So besides the payroll tax credit, what other kinds of tax credits might they qualify for? You mentioned the state credits. Is there anything else there that would qualify? Yeah,
so there's state R&D tax credits, and then the U.S. federal R&D tax credit. There's 2 ways to potentially utilize it. The default is income tax, right? You can utilize the R&D tax credit to offset income tax that you're generating from that trade or business, from your farm, or whatever it is that you're doing. So that's one, and that's what the majority of companies utilize the R&D tax credit for. However, for certain companies that are what we call eligible startups, Congress put into the rules the ability for those companies to utilize the R&D credit to offset payroll tax liabilities. So Social Security, basically, the Social Security tax that the employer owes to the government. So the employer side of Social Security. And the reason being is startup companies don't generally make money to start with, and there's more about spending money up front. So therefore, they're not going to have an income tax liability. So it kind of defeats the purpose of encouraging companies to hire people if they can't use the credit. So they gave them this ability to use the credit, the R&D credit, to offset payroll tax. But you have to be what we call an eligible startup. And what the definition of an eligible startup is, it's basically a company that has $5 million or less in gross receipts in the year that you're claiming the credit. So let's just say 2020. If your gross receipts for 2020 are $5 million and less, and so it's an and test, you have to meet both tests, and you did not have any gross receipts in the period 5 years prior to 2020, you can qualify. So basically, if you haven't been around longer than 5 years, then you could potentially qualify for the payroll offset. And so what that says is, in my example in 2020, you can't have had any gross receipts in 2015 or prior, but you can have gross receipts in 16, 17, 18, 19, and 20. So it's a 5-year rule. So the easiest way to think about it is if my company is 5 years or younger, then you can potentially be eligible to elect to use the R&D tax credit to offset payroll tax and thereby reducing your payroll tax liability, since you may not be paying income tax.
Awesome. And then with what kind of time frame can we take advantage of this, or can a company take advantage? So you mentioned obviously like this year, for example. What about like for prior years? If this is the first time they're hearing about it, can they actually go back retroactively and apply for years where they've done R&D activities in the past?
Yeah, absolutely. So you do have the ability to go back and claim missed R&D credits, along with any other, credit or deduction you may have missed on a tax return. So it's a tax concept, not necessarily an R&D concept, to be able to go back and capture missed credits or deductions. But the general rule is you can go back 3 years. So any open tax years, and generally speaking, an open tax years is 3 years. So right now, the years that would be open is potentially 17, 18, 19, and 20. And it's going to be dependent upon when you filed your 2017 tax return, because it's 3 years from when you filed your tax return. That's how long it's open. So the 2017 tax return, and I'm assuming calendar year. I know there's probably some people that are fiscal year payers, so it's from your year. But it would be 3 years from when you filed your 17 tax return, which would have been filed sometime in 2018. 3 years from that would be sometime in 2021. So the years that are potentially open for people are 17, 18, 19, and 20. There are rare circumstances where people can go back further, but your company has to meet very specific fact pattern to go back and get those years that may be in 16, 15, or 14. So you can go back and capture all those missed years through an amended return process. So you would calculate your credits, and then you would claim them on those returns, file them into return, and get a refund for the payment of taxes that you paid in those years. Now, to the extent you don't have enough tax liability to utilize all of your R&D credit, so let's say the R&D credit reduced your liability down to at least the minimum that you would have to owe, the R&D credit would carry back 1 year first. So if you had any tax liability in the prior year that you're claiming the credit, you can get a refund from the prior year for the current year credit. And then to the extent there wasn't enough liability in that year, it carries forward for 20 years. And so you'd be able to utilize this in the future as well if you weren't able to utilize it all. And the way the credit works, it's on what we call a first in, first out basis. So if you claimed a credit in 2020, weren't able to utilize it, it carries forward to 2021. And then you calculate a credit in 2021, you're entitled to that credit too. And let's just say you had tax liability in 21. You would use the 20 credit first, and then the 21 next, and carry forward the remainder. But credits carry forward for 20 years.
Wow, that's awesome. I mean, it's stuff like this that, again, we're all kind of wrapped up in the doing this and the day-to-day stuff in business. And sometimes stuff like this, that's, the government puts all this stuff out there, and without the knowledge of how it works, it just doesn't, you don't have a chance to take advantage of it. So
Right.
Amazing information. So, in your information sheet, you mentioned some environmental improvements as a qualifying activity. So could projects that relate to reducing fertilizer or chemical usage or water usage, could those be qualifying activities for this type of credit?
Absolutely, and that's a big issue right now in the industry. A lot of people are looking into that because that is a big cost of operating a business. And if we go back to my definition, the 4-part test: technical nature, permitted purpose, technical uncertainty, and process of experimentation. A permitted purpose is you're trying to improve a product or process, right? And that could include reducing cost or increasing yield. So if you're able to find a way to have the same product yield by reducing the amount of fertilizer, reducing the amount of water that you're using, that is clearly a qualified or permitted purpose, right? And you're using different technology or different ways of figuring it out. And it's not a plug and play, right? You don't just flip a switch and all of a sudden, yeah, I'm using less water and I'm going to get the same amount of benefit that I've always gotten. No, there was some thought, research, experiment. You tried it, it didn't work, you reconfigured. That all is exactly what the definition of R&D. It's a big circle, and you just keep doing it over and over again until you get to your desired outcome, and then you go into your next project, and that next project should be qualified for the R&D tax credit as well. But yes, reducing fertilization, reducing water consumption, reducing pesticides, that all can potentially meet the permitted purpose test in the R&D tax credit test.
Nice. So I just had a question. I guess this is more about you and your business model. So I know a big part of your business is really educating, like doing stuff like this, where you're really educating people about, the tax liabilities and how they can save money on their taxes. But other than education, do you provide other services that actually help businesses or perhaps farmers, to be able to take advantage of some of these credits?
Yeah, absolutely. So, it all starts with education and just meeting with people and educating on what is the R&D tax credit. Are you potentially eligible for the credit? It starts with that. But then, where we do a lot of our work is actually helping companies and individuals estimate and then actually calculating and documenting and claiming the R&D tax credit for them. So most companies do engage us to help prepare and calculate their R&D tax credits and prepare the proper documentation to claim the credit. So just like any other credit or deduction that you claim on your return, you are required to have substantiation, right? So if you pay someone a wage, right, you file a W-2. The W-2 is the substantiation. They got a copy, the government got a copy. That's documenting that you paid them that W-2. Same with claiming a deduction for you bought pesticides, right? You got an invoice for pesticides. You paid $1,000 for it. That's substantiation. R&D tax credit's no different. You got to have substantiation to claim that credit. And so that's what we specialize in, is helping companies prepare that substantiation, because most companies don't have just an R&D file of where they store all this information. So we specialize in helping prepare that. And also, of course, calculating and quantifying what you are eligible for, and then making sure that you have the proper tax forms to provide to your CPA or whoever is filing your tax return, that they have the proper tax forms to include with your tax return filings.
Nice. And so in terms of like the people you consult with and the people you work with, is there like an ideal customer, like an ideal size or an ideal revenue that they might have, threshold that they would probably hit, where you look at it like, okay, yeah, you're definitely somebody we can work with, and it's worthwhile for both parties, as opposed to maybe a really, really small farm that maybe wouldn't necessarily be worth it? Do you have like an ideal customer sort of makeup?
Yeah, absolutely. Well, first of all, any customer is ideal, right? So everyone should think about, are they potentially eligible? So I've worked with companies that have zero gross receipts, and I've worked with companies that have billions of dollars of gross receipts, right? So the size of your company doesn't necessarily going to be determinative if this is a good opportunity for you. What's going to be determinative is the dollars that you're spending on those activities, right? Those wages, those supplies, and contract research. And generally speaking, to make the cost benefit worthwhile to the client or to the customer, you're generally going to want to start spending or filling up that bucket I was telling you of cost around the $150,000 to $200,000 mark. If you think your bucket is that high or higher, that's when it starts to make sense to start consulting with an R&D expert on potentially calculating and claiming the R&D credit. Because when you think about my rule of thumb, right, $150,000, 10% would be a $15,000 R&D credit. You got to make, of course, there's fees associated with preparing documentation and calculating and filing and doing all that stuff as well. So you want to make the cost benefit worthwhile. And that's an individual decision on what is worth it to you. Is maybe worth it to one person, not to the other. But generally speaking, we start seeing people becoming interested at that $150,000 or $200,000 mark of spend.
And right. As well, I mean, our entire role here is about educating the client, making sure that they understand what types of activities that are ongoing within their business are going to qualify. I've been in many circumstances where we start off a conversation where they believe they're spending $50,000. And through discovery, we uncover that there's a large portion of business income that's attributable to the owner that is subject to self-employment tax, and we can include that in their wages. And all of a sudden, that QRE bucket that John is mentioning, increases. And so though, in order to make our analysis viable, or as John was saying, the cost benefit, of walking through this analysis, I would always encourage folks to reach out so we can make sure, as every business is different, as every business activity is different, that you have all of the information that you need to make an educated decision. And you never know, maybe you go in saying that we implemented this irrigation system change and it cost $60,000 last year, but you weren't thinking about additional processing from changing from maybe one plant to another plant when you moved in that year as well. It's worth having these conversations, and we're happy to help consult with you and try to get to the bottom of this. And of course, we can't run before we walk. We want to understand what your business is going through, and we're here for you and to help you get a better understanding of whether or not there is a credit to claim, and then from there, how we can be of further assistance.
Yeah, of course. I was just gonna say, of course, there's also the fact that if you may have a $50,000 or $60,000 thing in 1 year, but if you've never applied for these credits before, going back 3 or even 4 years, that in total might accommodate $100,000, $200,000, even $300,000 over the course of 3 to 4 years, and that might be falling into your category where it makes sense to actually have a consultant, as well as if they had it all in 1 year, let's say.
Yeah, absolutely. It's always worth the conversation. So that I'm happy, and Will's happy to have a conversation with anybody. And if there's no opportunity, or the opportunity is too small to make the cost benefit, make it worthwhile to the client, then that's what it is, right? We'll tell you that it's only a $5,000 credit, and you probably don't want to pay us to go document your $5,000 credit. Will cost you more. So yeah, we're always happy to have the conversation, and you don't know until you know. If it's not going to work out, we would definitely tell you it's not going to work out. But if there is more often than not, as we'll point out, there's costs that you don't think of that could potentially be eligible, that then increases the amount that you originally thought you were going to have.
Yeah, like I said, it's all about knowledge, and it's all about education, and of course, like you said, you don't know until you actually sit down and talk about it and figure it out. But absolutely. So I know, Jonathan, you've kind of given some examples when we were talking earlier of some farmers that you work with. Can you share maybe 1 or 2 examples of a farm that maybe you work with where you were able to help them out with their tax liability with this?
Yeah, no, absolutely. I mean, you mentioned some of them already with water consumption. That's a big thing right now, water consumption and fertilization, being able to use less of that. And so helping with that. Also, different techniques of planting crops to have a better crop yield, right? That is a different way that farmers have been looking into it. It's not necessarily planting whole fields, but maybe doing test plots or almost a controlled greenhouse environment where you're trying to do a replication of your potential, what you're going to do on a bigger scale, right, with crop yields. So those are, some big areas that we've worked in before. We've also worked with, seeds, right? And generally speaking, the farmers aren't developing the seeds, but there's definitely companies that are developing seeds that we've worked with as well, with hybrid seeds and strains, working on that, and developing pesticides and things like that as well. So all that is qualified activity with those companies as well, not necessarily farming, but related to the farming industry. So those are, some areas to think of that we've worked on in the past, but there's obviously more things, wastewater treatment. That's a big thing. If you have cattle and things like that on your farm as well, it's not just crops. What do you do with waste, and how do you get rid of that in an efficient way, or be able to reuse it, right? That's kind of a big area as well. That's in the R&D world.
Exactly. And then of course you have precision agriculture now with, people using drone technology and other types of, technical additions to what they've been doing in the past, which, again, their whole point is to reduce their overall costs and to improve the efficiency of their operation. But again, These are the types of things that this type of investment, the farmers who are investing in improving their processes are going to be rewarded not only in terms of the final outcome of a more efficient, better producing farm, but also, those processes are going to be sort of somewhat subsidized by the, by these tax credits. So that's a good thing.
Yep, absolutely. And you mentioned something that made me think of something else that we've done before is, logistics. So it's not just growing the crops or treating the crops or raising cattle. It's, once it's harvested, how do how do you extend its shelf life? How do you transport it to the certain parts of the country or to the market or wherever it's going, right? There's lots of stuff going around logistics, packaging, transporting, and how can you make it last longer once it's been harvested? So that's also a qualified activity: packaging, transportation, things like that. Trying to figure out how to do that more efficiently so that you can help improve your bottom line.
Absolutely, and of course, obviously. With what we're doing to help farmers increasing their shelf life, improving the quality, and also improving their yield, this could definitely work hand in hand with what we're trying to do to help the farmers as well. So very, very good stuff, guys. We're kind of wrapping up toward the end of our show here, but just any last words, guys? I guess the main thing is, how can they contact you if they have questions or they want to perhaps have that conversation of moving forward with a consultation? How can they get a hold of you so that you can help them out?
Sure, absolutely. Yeah, so you can reach out to either Jonathan or myself. I believe both of our emails have been listed below the screen. They're just our first and last name at kbkg.com. If you have any, so right there, jonathan.tucker@kbkg.com. It's likely best to either reach out, with an email or a phone call. We will get back to you within 24 hours of you reaching out, at least touching base to schedule a call or a meeting to go forward from there.
Sounds great. Well,
any other questions? We have our website with all of our contact information on there as well. So please reach out with any further questions.
Yeah, that's kbkg.com, and definitely go check them out, guys. Guys, I really appreciate having you on. It was super, super, super informative. I feel like I've been drinking from a fire hose, and I'm sure some of our audience, same thing, but definitely a very information-packed 30 minutes here. I really appreciate all of your time and all of your amazing expertise. And guys, if you guys have this idea or have been doing this research and you haven't been taking advantage of these credits, by all means, reach out to William or Jonathan and let them help you take advantage of these so you can improve your bottom line and improve your business as well. Gentlemen, thank you so much. Thank you so much for joining us today. I really appreciate having you. And everybody, if you have any more questions for them, please feel free to reach out directly to them. You can also leave comments or contact us if for some reason you can't get a hold of them, and we'll make that connection for you guys as well. And that's all we got. Gentlemen, thank you so much for joining us today, and we appreciated having you.
Thank you, Jim.
Thank you.